Welcome, ladies and gentlemen, Commodity TV. It's time for interviews, and with me here is Amir Adnani for the second time in Munich in our studios. I'm really happy to have him here, and we want to talk about gold mining, where he's founder and chairman. And Amir, welcome. Great to have you here.
Yeah, thanks for having me back.
We have spoken, I think, the last time it was when I was in Vancouver, if I remind that right. But since then, a lot of good things happened. You bought Belhaven. So maybe you want to start to comment a bit on that, because I think that's an outstanding achievement you did.
Well, since 2011 and our IPO, our mandate has been to make accretive acquisitions, especially bottom of the cycle acquisitions, where we feel it's an excellent way to reduce exploration risk by way of coming into resources at less than their replacement costs. The second part of our mandate has been to have a focus in certain areas and a focus on certain types of geology and mineralization and deposits where we can create districts. We've done that successfully in Pará State in Brazil. And we've done that in Alaska with our Whistler project. Our eyes and focus for the last 6 to 9 months was in Colombia, in the central.
Which is anyway hot, Colombia.
It's definitely become a jurisdiction and an address that is becoming, it's going through a revival, a positive revival in terms of exploration, development, permitting, production by various companies, mainly focused on a 300-kilometer belt in central Colombia. And this is the porphyry belt, the cocoa belt. And we made our first acquisition here of a project called Titiribi in late 2016. And we had our eyes on getting bigger in this area and again creating a district. With the transaction that we've announced, the acquisition of Belhaven, we absolutely accomplished that. This is a project, a company that had both a project containing 43-101 resources, but also some exceptional exploration upside based on 6 drill holes they had completed in a new area. The project is only 6 kilometers south of our Titiribi project. We've also applied for some new exploration licenses between the two projects, now creating a much bigger play. We've got a good neighbor to the north in IAMGOLD, a good neighbor 10 kilometers south in AngloGold Ashanti. So I'm very excited about this transaction, and I can talk about it more, but to answer your question, we're getting bigger in Colombia now.
Definitely. So that transaction will close by end of May, right?
We're looking to close it by the end of May. The largest, or some of the largest shareholders of that company have signed voting support agreements, and some of the notable ones would be the CEO of the company, Dr. Paul Zhang, who was the exploration manager for BHP Billiton in South America, had successfully sold his last 2 companies for over $1 billion. So a very successful geologist and entrepreneur, and we're quite delighted that he's joining our advisory board and that he becomes a shareholder of GoldMining moving forward. IAMGOLD, who was also a shareholder of Belhaven, will become a shareholder of GoldMining moving forward. So to some extent, it's really it's good to be able to check so many boxes when you complete an acquisition, where it's accretive from a standpoint of total resources being added versus dilution, exploration upside, creating a bigger package. So we're unlocking value that way, adding additional human capital, technical expertise, and great shareholders. So ultimately, when you look at the response that we also received in the market, the analysts that covered the company, both liked the acquisition enough where we saw them raise their target prices. We saw a good immediate response to the acquisition in the market as well, despite some of the recent softness and sell-off we've seen in the gold market in general.
Okay, great. I think it's really important to point out you are sitting on a ton of cash, which I really like, honestly, because you are not under pressure. You mustn't go back for, let's say, at least 4 or 5 years to the market. But also, besides sitting on a ton of cash, I think it's 25 million, around 27 million,
About 20 million. 20 million.
Sorry, 20 million cash, And but the point to me is you didn't pay cash for Belhaven. You exchanged shares. So you're using your stock as a wise currency, because you added 1.5 million ounces already, but there's big potential for more, I would say. And you have now 19 million ounces of gold and 24 million gold equivalent ounces. I mean, that's outstanding.
Well, it has, again, been a big part of our strategy, is to say, look, first of all, if you look at our last 4 transactions, they've totaled over $50 million that we've made these acquisitions primarily in stock. And so that is an important part of it, is for us to demonstrate that as we continue to back our stock and our share price with more gold resources and copper resources in the ground, and we become a more valuable company, and we have a strong balance sheet, then our currency has become a very strong currency for being deployed in acquisitions. And we've done that again successfully in our last 4 acquisitions, and again in the case of Belhaven. We are singularly focused on one issue, which is to minimize dilution. Myself and other insiders of the company own 25% of the company. And so what has really allowed us over the last 6 years of having been a public company, and there's actually a great slide in our latest presentation that shows how since IPO in 2011 to now, we have outperformed the TSX Venture, the GDXJ. I mean, the various benchmarks you look at, and you see that our singular focus on wanting to create value with very minimal dilution, making these accretive acquisitions as opposed to dilutive acquisitions, that has been a very important driver of ours. That's kept our currency very strong, being the shares. And that, you're right, and then it allows us to preserve our capital, our cash, on the balance sheet.
So you're never get under stress.
You're not, exactly, you're not forced into dilutive financings. And that's an important part of making sure you keep a very strong company moving forward when you're pursuing a consolidation acquisition strategy.
That's right. Strategy is one of the keywords. I think it's one more time, I think it's important to explain to our audience how gold mining is functioning, how gold mining is working. Because sometimes I get a comment, you know, when I'm at PDAC or whatever, and people come to me and say, you interviewed Amir, but you know what, I still don't get it. They are collecting ounces, but what they are doing. And then I say, okay, well, that's right, you are collecting ounces, but you have a game plan, right? I mean, you're collecting ounces when it's cheap, but when the gold price is rising, I would say you have the chance to go with 1 or 2 projects in production. You maybe can sell one at a higher price. Maybe you can elaborate a bit on this, more in precise on that strategy.
Yeah, and happy to do that. And, you know, and I can draw a parallel, and a parallel that I'll draw is the other yellow metal, the other company that I'm involved with, Uranium Energy Corp, where in 2010, when the uranium prices were out of favor, and in 2009, when they were just starting to come out of sort of their $40 round range, we were, as you say, acquiring assets. We acquired a number of projects in South Texas, for example. And when we saw the uranium price pick up in late 2010, we were able to quickly transition and become a producer of uranium. And so this is no different. I think the view here that we've had and what we've executed as a strategy at GoldMining is that you can create a lot of value in the mining business based on what you pay for an asset. And you can destroy a lot of value in the mining business if you overpay for assets. Yeah. So we believe that over the last 6 years, where primarily we've seen a resource bear market, is an excellent time to be an acquirer. Because when you can buy projects for less than the replacement cost of work done. So look at the Titiribi and Belhaven acquisition. Once that acquisition completes, between those 2 projects, we'll have close to 200,000 meters of drilling.
It's amazing.
The replacement value of that alone, meaning if you and I were to go drill 200,000 meters of new drilling tomorrow, the time it would take, the cost, would be 3 times more than what we paid in stock to consolidate that. So not to mention the time saving, but just the pure dollar amount. And not to mention all the other work that goes in before you can drill. So this is very much an entrepreneurial driven strategy where you look at this as a business and say, look, when the market is down, we want to make acquisitions. We've done that successfully for 6 years, but with a theme. Again, in certain jurisdictions, everywhere we are, Pará State or Central Colombia, we are surrounded by activity by other companies in the mining sector,
and infrastructure.
Majors, juniors, and there's infrastructure, exactly. So we're not just picking things up. We're acquiring projects based on either a theme, technical theme around a certain style of deposits, or a theme around how we see with infrastructure advantage we can move forward to production when we see the commodity price pick up, and when we see that it's time to be extracting value from our own existing portfolio as opposed to making new acquisitions. That's very simple. And again, we've done it at Uranium Energy successfully, and we are executing the exact same strategy here at GoldMining.
And that would mean now, let's construct a bit hypothetically. Let's assume gold goes to the 1500 level, which some analysts already see, yeah?
Right.
I mean, São Jorge in Brazil might be brought in production, right? And it's not like 5 years away. I mean, how fast could you do that?
Oh, I really like what we have in Pará State in Brazil. First of all, we've been putting together our project and our portfolio in Pará State since the company started. I mean, the company's roots are very much in Brazil. As you recall, we were called Brazil Resources. We changed our name late last year to GoldMining. The oldest investment bank and investment house in Latin America, who's based in Sao Paulo, Brazil, has been our strategic partner and shareholder since day one. The chairman of that bank sits on our board of directors. The president of our company is based in Brazil. He's a geologist. The former exploration manager for Kinross is on our team. So we have very strong understanding of Brazil. Yeah, and we've been spending money down there and permitting our Cachoeira project and consolidating projects within that area, doing the necessary work to also advance the project. So the São Jorge project that you mentioned, which is just a kilometer away from highway and power line infrastructure, is very ideally situated, in my opinion, for near-term production because of the fact that we've had a devaluation of the Brazilian real as well as key here. The overall cost of doing business in Brazil has come down in the mining industry. We're seeing around where we are with São Jorge, with projects that are further away from infrastructure, mines that are in production, that are going through feasibility, mid-tier producers like Eldorado Gold who are focusing on developing assets. People are being flown in and out of the area. You see activity. And so definitely believe that as you get to $1,500 gold that you talked about, our portfolio in Brazil has been in the company for the longest. Hence, it's a bit more advanced and mature. And so I see great near-term production potential and opportunity for us in that part of our portfolio, and then a great pipeline behind it of large gold, copper, porphyry projects, a district in Colombia, a district in Alaska, and both those jurisdictions are very much in the sight of the mining industry right now. They're very active areas, both Alaska and central Colombia right now, with majors, juniors exploring, developing, and looking to build the next generation of mines.
Great, perfect. Then, Amir, thank you very much. We look forward to the next news, and wish you all the best for that.
Thank you very much. Yeah.
Thank you. Ladies and gentlemen, it was Amir Adnani, the founder and chairman of GoldMining. And yeah, you heard it. I think most importantly, the company is well financed. And for the next, let's say, 4 to 5 years, they don't need to go back to the markets. They use their stock as acquisition currency, which I also really like, honestly. And I think it's a twofold strategy. What they are doing is when the gold price, or let's say the commodity prices are low, they buy very cheap, as they showed us in the past. And hopefully commodities prices are turning soon way up, so they have a, I would say, production optionality, which brings them very fast and in production, and for the future then to generate cash flow and profits. That's the perfect scenario. Check out the company. Thanks for watching us. That was, as I said, Amir Adnani. Bye-bye from Munich.